Today's video is going to be a little controversial, so please be kind in the comments. I'm going to talk about my thoughts on how much is okay to spend for your house, and I have a non-traditional view on this. So let's take a walk in this beautiful town and let's talk about it. So I'll cut right to the chase. If you're going to stretch on any living expense, I think your housing, and I'm talking about if you buy a house, I think it's okay to stretch a little bit in this area. You know, a lot of people, they have these rules of thumbs as to how much that you should spend and how much your payment should be. And I think that's good guidance. But particularly, you know, now with inflation higher, and if you buy in a good area that's desired, you know, I have always found it to be helpful personally for myself to pay a little bit more and to have a house that I know other people are going to want. It's going to be in demand. So what I've done in the past is I tend to buy one of the smaller houses, not always, but this is what I've done. I tend to buy one of the smaller, less expensive houses in a really nice neighborhood with good schools, because I think that that's going to be in demand. And the fact that I have one of the smaller houses makes it one of the more affordable choices when other people want to move from one neighborhood to the next neighborhood. So, you know, candidly, probably the most risky financial decision I made in my entire life is when my wife and I bought our home to raise our kids in. So our kids were 6 and 4, and we looked at, you know, what school system we wanted the kids to be in, and made the decision to move to a more expensive neighborhood. And frankly, I had to stretch. You know, the numbers were on the high end of the ratio. Fortunately, shortly after that, my wife got a nice raise, I got a nice raise, and so it all ended up working out. But it could have gone the other way, right? I mean, shortly after we bought our house, 2008, 2009 happened. So I bought kind of at the peak. Now, I had a house that I was selling at the peak, and I was buying another house, but the spread worked against me because I was upgrading the actual cost of the house. And what happened in 2008, 2009, of course, is the market corrected, and basically I was underwater for a period of time. Now, this was a home that my wife and I were planning on raising our kids until they went to college on. So the fact that the prices dropped, you know, we weren't sellers. So while we were disappointed, and I sure wish I had waited 2 or 3 years to buy that house, we were able to get the house that we wanted to raise our kids in, that we were in the school system that we thought was the best match for them, and we weren't going to be selling for another 15 plus years. So, you know, Warren Buffett talks about with the stock market, right? One of the challenges with the stock market is you always have a price to sell at. There's always a bid, there's always an offer for what you own in the stock market. And he uses the analogy of, you know, if you were a farmer and the farmer next door came over and said, hey, you know, I'll pay you X dollars for your farm, and every day you had to make the decision, are you going to sell? That would be really stressful for a lot of people. And Warren says the same thing. You know, when he looks at the positions that he buys, you know, sometimes he gets unlucky. You know, he bought Delta Airlines just before the pandemic. And as much as he talks about staying the course, you know, in that case, he thought that the industry was changing irreversibly. And it was going to take a long time to get back to the travel levels that Delta was at pre-pandemic. It would be a long time to get back to that. As it turned out, you know, we've all seen that the airlines have rebounded, and at least here in the U.S., the price of airline tickets have, in my opinion, really gone up quite a bit. And I suspect it's a very healthy environment for the airlines again. And it bounced back quickly. So this is a case, you know, I've shared how hard it is to stay disciplined. And this is a time that maybe Warren was not as disciplined in hindsight than he wished he had. Or, you know, his bet was, you know, they did his research, and his bet was, excuse me, his bet was that the world was going to be different post-pandemic, and it was going to take a lot longer to get to those levels. And you know what? sometimes you make a good decision. You've got good data and you make the best call that you can, but the outcome is not in your favor. So getting back to the housing illustration and the concept of the farming, Warren says, as long as you're planning on being a farmer and you own your farm and you're running your farm profitably, the fact you have a neighbor that every day is giving you an offer to sell the farm and here's the price that they would pay, when buying farms is in favor, you're going to get a higher price for that, and when buying farms is out of favor, you're going to get a lower price. So I kind of felt the same way with my house. I was disappointed that the market fell. It was probably the most steep and rapid correction in the real estate market in many decades. And I was caught up in the middle of that, and I was a little bit on the high side of what I should have paid. But here's the outcome of that was, my wife and I felt that we could cut back. Frankly, our house had a basement apartment. We could rent that out if we needed to. So we had some other avenues if we needed an extra cushion. And as I said, my wife got a nice raise, I got a nice raise, and there we're in the comfort zone. And then frankly, because of the financial crisis, interest rates started to go down. So originally my mortgage was at 6.5%. And as interest rates dropped, we could refinance. And I did what's called a zero cost refinance, which, basically, and this isn't a video on this, but you can actually refinance your loan at a slightly higher interest rate than you otherwise would be able to get. And so other investors want to buy that loan because you've agreed to pay a slightly higher interest rate than is out there. And it creates value, right? My mortgage was more valuable for an investor to have because in my case, I agreed to pay 1/8 of a point more in interest rate. And the difference in value for that mortgage versus a mortgage at a standard interest rate is something called yield spread premium. And I could use that yield spread premium to pay all my closing costs. So it's not like there was a cost that got put onto the loan. There was value created by me paying a slightly higher rate, and I could get that cash out and actually pay my out-of-pocket closing costs. So it was a true zero-cost refinance. You have to be careful because some mortgage brokers will say this is a zero-cost mortgage, but what they do is they just wrap it up into your mortgage, and then your mortgage, the amount you have to borrow goes up. And in my case, that wasn't the situation. And long story short, I was able to go from a 6.5% interest rate down to 2.5%. And that's a lot of money. And I was able to, by doing it zero cost, every time interest rates went down, I was able to take advantage of that. And I share this, I should probably do a separate video on this, but I share this that, anytime something negative happens, there's likely a silver lining there. There's likely an opportunity that you can also take advantage of. And this is a classic example. So my thoughts on housing, this is one place that I'm more comfortable stretching a little bit. I think over, particularly if you're planning on having the house 15 plus years, I think over that period of time, it's highly likely that the real estate's going to, on average, increase by about the same rate of inflation. Now, I'm not a real estate agent. I'm not an accountant. I'm not giving financial advice here. It's just I encourage you to look at your situation and do the research and make the decision that's right for you and your family. In my case, I live in a town that did not have as many, as plentiful of good high-paying jobs as maybe New York City or San Francisco would. But what happened is after the pandemic, my town was one of the towns that people wanted to move to, and the price of real estate shot up. So it took, because my housing price dropped right after I bought it, it took 12 years, maybe 13 years for me to get a 50% increase in the value of my house, which was basically keeping up with inflation. It wasn't my greatest investment. And then shortly after the pandemic, the value of my house doubled. So it ended up being one of my best investments. And because you do have leverage, I was borrowing money from the bank for my mortgage at 2.5%. I did have a 15-year mortgage. I should do a video on mortgages. I did have a 15-year mortgage, so I was paying that mortgage down pretty quickly. Again, if I needed some flexibility, I could have gone from 15 years to 30 years on my mortgage as well. So, this is an area that I think it's okay to stretch a little bit. You don't want to go overboard, and you don't want to plan on being able to sell. Well, if it doesn't work out, we'll just sell it. Because if it doesn't work out for you, it might be because the economy is doing poorly, and it might be hard to sell your house. When I bought my house, it was the peak of the real estate bubble in 2006, and you literally had to, tell your boss, I need to take a couple hours off of work and go check out this house because it's going to have 3 or 4 bids on it if I don't get my bid in. It very quickly, in just a matter of months, went from a situation like that to a situation where it was really hard to sell your house. You could, but you were going to take a beating on it. So anyways, that's my thoughts on houses as investments. Again, not financial advice. I do suggest you work with a fee-only financial advisor. You can find one by Googling fee-only financial advisor in a situation like a house, a real estate agent, obviously. But realize, their incentive is, they get paid on commission. So they're biased. And you want somebody in your corner that understands the market, that's working for you and giving you advice that's best for you. So I hope you found this video helpful. If you did, do me a favor, hit the like button. It really does help the algorithm find other people that videos like this can be helpful for. And leave me a comment. I really enjoy reading the comments. I try to reply to as many of them as I can. Fortunately, this channel is growing very nicely, so thank you to all of you that have taken the time to watch and to like and to comment. And until next time, I'm Azul, encouraging you to take full advantage of the youth of your senior years. Remember, you're only young once. Use this time wisely.